Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, Lynette Zang. Lynette is the Chief Market Analyst at ITM Trading. That's itmtrading.com. And I am very happy to have her back on the X22 Report Spotlight. Lynette, welcome back to the Spotlight.
Oh, Dave, it's always good to be here. Thank you for having me.
Hey, thanks for being here. And I mean, before we started to record, we're having this discussion about socialism. We're having a discussion about true capitalism. And we're starting to see a split and a discussion about both right now. And we're starting to see that people are getting a little confused about what true capitalism is, what crony capitalism is, what socialism is. And I think we discussed this right before we started to record, and that's why we decided to record, that we needed to discuss what this is all about. Now, you were telling me that there's this discussion going on amongst individuals about capitalism, crony capitalism, socialism. And we hear Trump out there saying, we don't want to be a socialist country. We see Alexandria Ocasio-Cortez calling for socialism, other individuals talking about socialism. Now, what do you think is going on here? Why is this whole discussion coming up right now?
Well, it isn't a brand new discussion. This is actually the rise of populism that we have been seeing particularly since 2008 when the crisis came up. So this is an evolution. That's what I'm really seeing, is more of an evolution, because income inequality what they call the form of capitalism that they're talking about is really crony capitalism. It's not true capitalism where somebody stands or falls on their own merits.
Right.
Think about 2008. That's what we were talking about.
Right.
And those banks that took those risky bets, they would have failed. They didn't fail. They got bigger. They got systemically more important. And those big bets that have been untested, their current experiments that are inside of the system, it's a ticking time bomb. But this is not capitalism. So that's what's going to push us into the next financial system, the next political system. And we need to be able to make these educated choices so that we actually get the kind of system that we really want, that's going to be more fair. I'm not going to say completely fair, because that is not going to happen, but at least more fair.
Where do you think we're leaning towards? Do you think we're leaning towards more crony capitalism, or do you think we're leaning towards socialism, or do you think we're leaning towards true capitalism?
Well, okay. Well, right now we are hugely inside of crony capitalism. And the reason is this. It's really interesting. I'm constantly researching. And so I'm actually working on this right at this moment. But we have shifted in the financialization of the economy, where we used to be agriculture. And then we went to manufacturing as the most important. Then in the 80s, once the central banks took control, finance began to become the most important. And we went from a savings-based economy where the individual would save and produce to a debt-based economy where all of these new products and experiments, in this financialized world, they're all short-term debt instruments. They're all debt. It's all based on debt. That's why credit scores have become so important, and the ability to take on debt. And now they're going, oh yeah, we've got to give better salaries. Why? So that people can consume more and they can service that debt, because that's what the whole system is now based on. So crony capitalism? Oh, heck yeah. Take a look at the consolidation. Take a look at 2008. That really isn't that long ago. Think back. These banks were insolvent then because of the leverage. They have more leverage in the system now. They just changed the accounting rules. That's all. They didn't get rid of the leverage. They just changed the accounting rules. That's what they do. So you can't see all the leverage and the off-balance stuff that they're doing. Crony capitalism? Yeah, crony capitalism. The industries, the financial sector, the corporations, the zombie corporations, the sovereign wealth funds, these are all targeted to succeed. And it's all on the backs of the population, their ability to be taxed and their ability to consume and create and service debt. And that's why we're going towards socialism, which I'm not a believer of socialism either. But crony capitalism, no, I'm a big believer in true capitalism, where you succeed or you fail based on your own merits. I mean, look at what's happening in Wall Street today with the unicorns, right? These are corporations that their whole business plan is not to make money and probably never, ever, ever to make money. And yet they're valued at $23 billion, $42 billion, $79 billion. Why? Why are they valued that way? Because that's the amount of money that risk takers, the early quote unquote investors, that's the amount of money that they put into this endeavor. And all the while that these layers of fundings were creating these corporations that don't have to make money. I know I'm ranting right now, but these corporations that don't have to make money go into these industries, and Amazon set that tone, and they decimate the middle class. They decimate the mom and pops. They decimate them because a mom and pop has to make money in order to stay in business and provide a service. But these new corporations, these unicorns, they don't have to do that. Wall Street puts that valuation, and then they turn around, the insiders, and this is what's happening right now. The insiders are selling out. Most of these, like Lyft, got a 20% first day pop. Levi, at least they're profitable. They got a 30% first day pop in price. So the insiders that have pushed these overvalued corporations to ridiculous heights are selling into the market to funds, ETFs, that the normal person is buying. They have no idea what they're buying. They're buying risk. That's what they're buying, and they don't even know it. They're buying an unprofitable corporation. And just like in 2000 when that was discovered, that all of these corporations that had 800 times earnings, losses as far as the eye could see, and then that bubble popped, this bubble will pop too. And it'll pop in the face of mom and pops. And that's why, and people won't understand it. Because the bottom line of all of this, and this is probably the biggest thing that I see with any kind of movement, whether it was the 99% or the populist movement, it's that they don't really fully understand the foundation of what they're fighting for and about. And it's about the money that they work for, they use as their tool of barter, so it values their labor, and they attempt to save it for down the road when they need it. But the system is rigged, so they will never be able to do that. And over time, the value of their labor just erodes and erodes and erodes. And that's the problem. That's the real problem, is that people don't know that. So they don't know what they're agreeing to.
So do you think that the next time you're talking about that this bubble is going to pop, do you think the government's going to step in again and save these type of companies, corporations?
No, I think they can't do it anymore. That's what I think. When I'm looking at all of this information and this data, what I'm actually seeing is that there are no tools left. But, you know, I mean, I've been saying forever that the system died. The system that we knew it died in 2008. And I just uncovered a NIBOR working paper, which I haven't fully read yet, but I'm in the middle of it, because it's like everything kind of comes together in here. And what they're talking about is how the system shifted in 2008. That was the conclusion of a planned trek from getting rid of any true collateral-based system where there's value underneath there to a pure collateralized system where it's just short-term funding. It's just trading funding, which is not stable. But that shift concluded in 2008. And look at what's happening. Are they going to do QE4? Well, supposedly the U.S. is doing so great economically, supposedly. Why do we need QE4? Not only that, inside of this paper, and again, I haven't fully read it yet, but I will. I'll finish reading it. But they were talking about the fact of planned recessions to burn off this excess. But the central banks globally are out of ammunition too. Do I think they're going to try to do it again? Yes, but I found evidence where over time, all of this same behavior has become like pushing on a string. It just doesn't work anymore. No matter how much debt you take on, I mean, people, corporations, governments, at some point, they must service that debt. And we are at that point. And that's why they're calling for more morphine in the system, or heroin, or whatever, but more free money drugs in the system with QE4 when we are officially not in a quote unquote recession. That's ridiculous.
True. So, I mean, let's just back up for a sec here. So the Fed, they were planning on raising the rates in 2019, 3 to 4 times. Now they're not doing it at all. They took that off their plan completely. They're also winding down their tightening of their balance sheet, and they're going to, end that, I think, in the fall or something like that. So the ECB right now, they decided, you know what, we're not going to raise rates either. We'll decide it later this year, which most likely they probably won't raise the rates at all either. So we have the central banks right now, they're not raising rates. Now, like you said, statistically, and we know these statistics are manipulated, statistically, the economy is doing better than ever. If you look at GDP numbers, if you look at unemployment, and you look at all the other statistical numbers, you would think that the central banks, they would, continually raise the rates. They would continually tighten. They would continually do all this because during the presidency of Obama, when the statistical numbers weren't that great, they were, thinking about, okay, the economy's getting better. We're going to start raising rates. As soon as 2016 hit, they started to raise rates quite a bit, and the numbers got better and better and better. And all of a sudden, they moved away from raising the rates. Are they afraid that by raising the rates, were they afraid that the economy was going to come down and they were going to be blamed for the economy coming down?
Exactly. Because what happened as they were raising the rates? We ended up with an inverted yield curve.
Right.
Now, according to their own data, the most likely outcome is a recession. And, and let's face it, this is happening on a global basis where yield curves are inverting. And people think, like Forbes did an article recently that said, oh, okay, we're out of that danger. Are you kidding me? It doesn't happen that fast. So we know that that's what's coming. And how are they going to service all of this debt that they can't service anyway? And yet we're supposed to take on a lot more debt.
Well, can we take on a lot more debt?
This is leading? No, we can't pay the debt we already have. In 2009, 77% of the debt that we were servicing was compounding interest. Okay, that's gotten worse. Even as they've held interest rates at zero or negative rates, that's gotten worse because once you start that compounding process, how do you ever get out of it? So they're trying to raise rates into it, which means that the compounding of those of the past interest just occurs more quickly, and we've got deficits as far as the eye can see, which means that we are spending trillions more than we are taking in tax revenue. If anybody thinks that the taxes are going to stay down, think again. How do governments generate income? Through taxation. Why do they want everything digital? Because then they can tax everything. Lifetime taxes. It's just like you're limited on your losses on an annual basis, but you're not limited to be taxed on any gains in any given year. So what do you think they're going to do when everything is at their fingertips? That's why we have to maintain choices. That's why it's critical for people to really understand what the real fight is. It's about the money that we get paid that values our labor. It's about the money that values our labor. We deserve, how much is your time worth? How much is your time worth? How much is your effort worth? How much is that worth? Why do you let others dictate that? You should be dictating how much you're worth by being paid in money that retains its value, or at least doesn't lose it at some central banker's whim.
Well, that's the big problem. That's the big problem is that yes, my time is valuable and I like to get paid, but when you're using a fiat currency and it's losing value every single day, it's very difficult to stay afloat and get ahead because it takes more of those same dollars to purchase an item. Take a look at the minimum wage. Why do we go? I mean, when I was younger, the minimum wage was $3.35. As time went on, I mean, what are we at? $15 or something? Why has the minimum wage gone up to 15? Because nobody could make it on $3.35 an hour. So at some point, we're going to have to get rid of this fiat system. At some point, we're going to have to say,
well, that's where we're at.
Yeah, I believe that too. I believe we're at the end stage now.
Yeah, I mean, it has to be, because now they're going to negative rates. Everybody's going to negative rates, which they've gotten all the purchasing power value, right? Officially, less than 4 cents and dropping, right? That's the official rate. The only reason why it still has any value is because we have agreed to work for it and use it as our tool of barter. But once we go into, and that's what all of where we're at right now will push us into that hyperinflationary depression that we have already started to enter. We just don't know it. It's just not visible quite yet. But with all of the global central banks doing that pivot and now talking about doing more QE, it didn't work before. All it did was inflate those asset bubbles, the fiat money asset bubbles. And, it's funny because, is this a bear market or a bull market fake out that we're going in right now? Or is it the melt up phase? It's hard to say because the system that we know is dying. And so to generate more controlled inflation, I think they're out of tools. I don't think they can do it. And that would mean that we're entering the melt up phase, not the bull, the bear fake out or the bull fake out. But it's hard to know. It looks like it, though. If you see those global central banks turn on those spigots high speed again, which is already happening or promised to happen in Europe, I mean, what do you think?
I think they are going to do QE 4, 5, 6. I think they have to. I think there's no other choice. Yeah. I think they need to do this to keep the system going. But I mean, we talk about the debt and we talk about the system can't go on. We're at the end stage. I mean, I'm hearing rumblings that gold is going to make a huge move. Do you think if gold does make a huge move, do you think this would protect us or help us with the debt? So let's say, we had gold.
You own it.
Well, yeah. I mean, look at Italy. They're fighting with the central bank right now. They're saying, listen, the gold belongs to the people. It doesn't belong to the central bank. We want it back. And they're passing 2 laws now that they're trying to take away, they're trying to get the gold from the central bank and say, it's not yours. If countries
Yeah.
have gold and gold starts moving, I mean, we know that Russia and China, they've been accumulating a lot of gold. India's been accumulating a lot of gold. Other countries have been repatriating their gold. If countries, and supposedly the United States has gold, some people say no, some people say yes, but if gold moves up, wouldn't this be the weapon to use against the central bank to help us with this debt problem?
If you had an honest government, then yeah, because the government would use that gold to stabilize everything. The problem is there's pretty much of a revolving door between central banks and governments and Wall Street. So, whose best interest is this really in? I think that it makes the most sense to become your own central banker, and you hold the gold. You hold the silver. You hold it yourself so that you can guarantee, or almost guarantee anyway. I mean, I can't give you many guarantees, but they're holding it to hold its value and therefore their power. Well, we should be holding it for the same reason.
So by holding,
I wouldn't trust the government at this point.
So by becoming your own central bank, by holding gold and silver, how does this protect you? Because, I mean, this is what people have been seeing. People have been seeing the gold price, move up a little bit and move right back down a little bit, move up a little bit, really hasn't been going anywhere. I mean, at one point it has come down and people get nervous saying, oh, why am I holding this? It's losing value. Why should I hold this for the future? How is this going to protect me? Because it's bobbing up and down. Now, how, by holding the gold, by holding the silver and holding these precious metals, how does it protect you?
So there are a few things that I heard you saying in there.
Mm-hmm.
Okay. Number one, as far as the gold price in terms of in this country, dollars is concerned, but that would be true anywhere in the world in terms of their own currency. What you're really looking at is spot gold, which is a fiat money product that was developed to control the visible price of what people see, and therefore is called perception management. That's their term, not mine. And therefore control how you feel and move forward. So you have to always understand what the true value is of any asset or instrument. Gold is the primary currency metal against which all other currencies are judged because it contains all intrinsic value. It is indestructible. You can divide it without any loss of value. It is globally accepted. And it is a store of value over time. So it meets all the criteria to be a good money. And it is also quite limited, and that puts parameters around governments. So they don't want you to hold real money gold because then they can't use the inflation tax against you because it holds its value over time. And it's out of the system, so it's invisible to them. So therefore, it's harder to control. So that's why when you're looking at the spot market, that's a manipulated price. It's $1.50 to control 500 ounces of gold if you are JP Morgan Chase. And I'm not exaggerating. You can go to the CME website and see this. It's $1.10, so $110 to control, what would 500 ounces of gold be, at this point, right? It's cheap, easy to control. A rising gold price is an indication of a failing fiat currency. So it is to the central banker's benefit to suppress the visible price of gold while they are massively accumulating. Year over year, central banks have bought 77% more gold. And there have been a broadening base of buyers, not just in the central bank arena, but in a lot of different arenas that would show you the smart money is quietly accumulating while they cheaply suppress the price. Therefore, what we're seeing on both a short-term and a long-term basis is gold forming what's called a cup. And it really kind of looks like the bottom of a cup. And that indicates that smart money is accumulating. 360 will be the breakout of the short-term cup, or 1360 rather, will be the breakout of the short-term cup on gold. So do I think it's going higher? Oh, yes, I do. But not just because of the spot market. That will continue to be controlled. The reason why you buy gold and the way that gold and silver, because it's not just gold, it's silver. Those are the two monetary metals. The way that they protect you into what we're going into is quite simply because of the broad base of buyers through manufacturing, in electronics, in the monetary system, in art, in food, in jewelry. There is always demand for gold. They revalue the fiat money against the physical monetary gold, like we've seen in many countries, in Venezuela, in Turkey right now, all over the place, in this country, from $20 an ounce to $1,300 an ounce. They revalue that overnight, and then gold starts to move toward its true fundamental value in terms of that fiat. If you hold gold, you're participating in that. If you hold paper, it goes away.
But what about the manipulation from the central banks? Aren't they going to try to keep gold down?
Yes.
And is this going to end? Or?
Yes on both counts, because yes, they're going to suppress the price of gold as long as they can. Though remember, there's also a cost to mine. So the price of gold really, I'm not saying that they can't push paper gold below that, but you wouldn't get any gold into the market, period. Because it would be, so there's a floor on how low they can actually push it. Real gold, they cannot push to zero because of that demand as well. So you have global demand. There's a limit to how low they can even suppress the price of gold. Now, when they're ready to reset the currency in the system, that is how it is done. It's not like they've got a dozen or even two choices. That is how it's been done for 5,000 years, is they revalue that fiat that has no value. It's used in one place, and it only has value because you agree that it has value. But it has no other value than that. So they have to revalue that to physical gold to get rid of all these debts, to repay all these debts with currencies that have no value. Now, if you're an individual, and let's say you have a fixed rate mortgage and you buy gold, well, you're going to be executing and you hold on to it into the reset. Then you get to liquidate that gold for those fiat dollars that have no value, and something that might take you, 10 ounces of gold today might take you an eighth of an ounce of gold then. So that's the same strategy that central banks and governments are utilizing. And so we can take advantage of that. I believe so strongly that you look at what the smartest guys on any given topic are doing for themselves. Those guys, those early investor unicorns, they are flipping, selling out, right? We've been watching tons of insider selling. Central banks are accumulating gold. The 1% are accumulating collectible gold. That's what they're doing. So that's what I'm doing. I'm emulating them. You don't have to know all of these nuances. You just need to know where and how. That's the pattern piece that I always talk about. You just have to know where and how to look at a few simple things. And then And then ask yourself, well, how can I do that? That's what the strategy that I developed based on repeatable patterns. It's not rocket science. It's just what always happens, and therefore, what's the next most likely outcome? How can I be in a position to take advantage of that? And how do I know where we are in this trend? I am not a short-term trader. I'm not going to look for something like that because it doesn't matter to me. It's not what's important. I am a long-term strategist, and I want what's called dynastic wealth. That's wealth that lasts in families at least 300 years, and it's not intangible. That's the kind of wealth that evaporates. That's why fiat wealth evaporates, because it's intangible. It's not real. But real goods that can survive all of the abuses between governments and central banks and inflation and income inequality and revolution and pestilence and all that stuff. Well, what are those? Well, it's the three legs of the dynastic wealth stool, which is real estate, rare collectibles, and gold. Gold is arguably the most important leg because it's what supports the other two legs. And you can actually do gold in all three legs because you can have a gold mine, you can, and you can have a rare gold Fabergé Easter egg or a super rare gold numismatic coin. So that's what I want, is something that's real, that is in my possession, that I know that is invisible to everybody else, and that's real wealth. And I can always convert that into any good, any service, or any currency, no matter what is happening out there. So yeah, we need to be going into this, and we've already begun. This is not something we're looking to start. We're in the middle of it already. You know, we need to be as independent as possible so that we can sustain our current standard of living: food, water, energy, security, barterability, wealth preservation, which is what you do with the gold and the silver, and community and shelter. That's what we need.
You said something very interesting, that gold is invisible to the system. What do you mean by that?
Well, once you buy the gold, the physical gold, and you're holding it in your hand, well, nobody else can see it but you. So it's invisible to the system. The central banks, you know, nobody, who knows, who's to say you didn't give it away? Quite honestly, that is what I give gifts.
They don't keep records of who gets gold and who doesn't have gold and things like that?
No, not at this point anyway. When you're buying gold, physical gold, it is a non-taxable event. When you liquidate the physical gold, depending upon what it is that you're liquidating, that may or may not generate a 1099. Now, all good citizens should always pay all taxes that are due. But it's upon the liquidation of it, and it kind of depends as to whether or not it becomes visible. Now, do companies have to keep records of things? Of course you do, because there's tax records and all that stuff that you have to maintain. And I'm not saying that if records weren't subpoenaed that they wouldn't be provided, because, of course, we're always going to do everything that keeps us to the legal letter of the law. We're super careful about that. But the reality is it's just, if like you go to a jewelry store and you buy a necklace and you walk out of there, does the jeweler have a record that you bought that necklace? Yes, but maybe you gave it to your daughter, or maybe you gave it to a friend. I happen to give gold and silver as gifts. I mean, I've been doing that for years.
And is this why the central bankers hate it? Because they can't find out what your wealth is. I mean, if you have the fiat currency in the banking system, they all know what your wealth is. They know if you're in the stock market, they know what you have in the bank, they know everything. If you have gold, it's completely out of the system. They have no clue what you have.
Exactly. And you know, Dave, I was a stockbroker in the 80s, and so I remember the transition. And some of your older listeners would remember what were called bearer bonds, where
Yes.
you had coupons, and those were held out of the system. Well, you know, when I became a stockbroker, the big push was assets in house, right? So once you made a deposit of those bearer bonds, and whoever held those bearer bonds owned those bearer bonds, by the way. Okay. So it transferred title also invisibly. Whoever held them owned them. Same thing with gold. Whoever holds it owns it. And, you know, they didn't like that. So they did a big push to, and also stock certificates. People would take possession of stock certificates out of the system, harder to track. Today, you can't get a bond. You can't get a bearer bond. They are only issued in what's called book entry, which means that it is legally owned by DTC or Seed and Company, even if you have it in your account. You don't actually own any of that. Stocks, you can still get stock certificates, but there is a huge push to do away with stock certificates. And while we're on that, look at the shift that's been happening with stock certificate ownership and voting rights, with the dual class of shares that are coming out, where what are you really even getting if you think you own a stock? Because if you don't like what's going on there, you have no say. Levi sold, 235 million shares, or I don't know, something like that, the family did, and they retained 99% of the voting rights. So, you know, I understand there's a big shift in obvious ownership after all of the years of unobvious where people gave up ownership. But yeah, that's why you have gold, because it's the only thing that is actually out of the system and invisible. And yeah, you're right. That's why central bankers hate it.
Do you think gold could destroy the Fed?
Yeah.
I mean, oh, okay, you do.
Yeah, if enough people understood it and made different choices, and actually, you know, I mean, we vote with our pocketbooks, don't we?
Yes.
That's how they get what we really feel and what we really need. So yes, I think that together we have the ability. There's more of us than there are of them, but I think it's important for people to understand what they're really fighting for, and then do it. I mean, you know, just live your words, but think about it. You know, I'm 64. I'm only going to be here probably another 30 or 40 years. I think I'm going to make it to 100.
That's fantastic.
But it's for my children and my pardon?
I said, that's fantastic, making it to 100.
Yeah, well, it's in my family, so, and I eat really healthy, so I think I got a shot. But still, you know, my life is mostly over. It's really for my children, and especially for my grandchildren and my great-grandchildren, and on and on and on. You know, that's why I'm really doing all of this, is for the generations to come. But it's the generations that are here, and especially it's in the, you know, millennial generation and after. They're really the ones that need to understand this, probably more than anybody else. But presumably, if you can get 3% of the population, just 3% of the population, to go in a certain direction, that could be enough to tip the scale. So when you think about it that way, maybe it's not as daunting. I mean, education is what your work is all about. So and you do a great job of it, by the way.
Thank you. So do you think we're still headed towards a recession? I know we talked about this before in our other interviews.
Oh, 100. Yeah, I have no doubt. No doubt. Look, there was a minute there where the 10-year bond rate was below the overnight Fed funds rate. I captured that image. So I have that image.
I mean, right now, I mean,
I'm sorry.
the Fed is backing off of, the interest rate hikes. They're backing off, tightening their balance sheet. And we're starting to see maybe the Fed will start to introduce stimulus again. Will
Yeah.
this push us further out now, like maybe past 2020?
You know, these are things that are beyond my control, but what they're doing is more like pushing on a string, so I wouldn't guarantee that. I wouldn't guarantee that at all. And I think a lot has to do. Jim Cramer, not my favorite person, but on CNBC, he said, watch out after the Uber IPO. Now we'll have to see what happens in the markets, because that's the gauge of it. Is this a melt up? If they start pumping more money into the system, then we could be in the melt up phase, but I still don't think that's going to stop a recession. You've got a global slowdown. All it'll do is keep fiat money assets inflated, but that's not going to stop a recession. I mean, ask people out there, all the money that they put in the system since 2008, isn't it just a select group that thrived through that? Most people did not thrive since 2008, attempted to withdraw stimulus and everything started imploding.
Well, yeah,
it didn't work.
I know. This leads me to my next question then. If the world economy is slowing and the central banks, they're the ones who are supposed to be managing the world economy, managing the United States economy, aren't they exposed now? Because they're the ones who are supposed to be managing. Aren't the people going to say, hey, wait a minute? I mean, I know Trump's out there. He contradicts the Fed. Every time they do something, he says, why are you doing this? Why are you doing that? Isn't this going to expose the central bank system that whatever you did, it did not work?
Exactly. You're exactly right about that. And that's the problem for them, because it's all a con game requires confidence. And so you've got to have confidence that the central banks can manage this, that the governments can manage this, or guess what happens? You lose power.
So do you think the central banks will lose power?
I think they're scared to death of it. I don't know if they'll lose power or not. That's where the IMF comes in. That's where the crisis comes in. So it depends on how believable all the garbage is, or how scary it really gets out there. But ultimately, I mean, look at Venezuela. How much confidence is there in the government or the central bank there?
Right.
And even with Brexit shows a loss of confidence. That's the whole point of Brexit, is the populist movement. That's what Trump getting elected for was all about. It's the populist movement. And now we're having a conversation between capitalism and socialism, even though it's not real capitalism, it's crony capitalism and socialism, and why we may end up, toward the socialist movement, which, then I think you lose even more control. You give even more control up to the government. I think we need to, as a whole, as a population, say we've had enough. And understand what we're fighting for, and then, live with integrity and live your words. And coming together as a community is one way that we can do it. And becoming your own banker is another way. I mean, I've been studying currencies since 1987, and there are repeatable patterns. And when you look at what governments and central bankers are doing, and you look at this path, what you see is that it really is just a typical pattern in any currency's life cycle. Maybe they have new tools because of the technology. And so, this great experiment was the first time that they really controlled the speed of inflation. But what's the difference between inflation and hyperinflation? It's just the speed of it. The end result is the same. They get everything, you get nothing. And you made such a good point about people. I mean, they're living paycheck to paycheck, most of them. They can't save up for the future. This was not an accident. this was all by design. Why is that okay with people? We have to say, no, you don't get to design what we're willing to work for anymore. No, we want to have a say, a real say, and we want to have a way to monitor that you are not abusing that over time. Because what will end up happening when all that confidence is lost is they'll put a component of gold. I mean, I really do believe that the SDR is perfectly positioned to be the next world reserve currency, having components of, key currencies globally. But I think ultimately it'll probably be a component of all of its members. So maybe 189 different currencies so that you can have a global currency that is also a local currency if a component is in there. That's what they're talking about. It makes sense. It's logical. It's easier to trade on a global basis. I get that. But they're going to have to put a component of gold in there to stabilize everything. When all of the global confidence in the central banks, in the governments, in the financial systems, in the currencies, when that's all lost because we've been so sorely abused, I mean, just think about Venezuela on a global scale. And people say that can't happen. Sure can. It's happened in this country before 3 times during civil wars, or wars, not necessarily civil war, but that was one of them. The Revolutionary War, the War of 1812, and the Civil War. We had hyperinflation in this country. We've been in a perpetual state of war since 1989. This is not an accident. We have less than 4 cents officially of that dollar. And the more debt we take on, the more money that they print, the less value that currency has. And when they do that QE, we've already seen an uptake in the monetary velocity, which means the speed that money changes hands is already upticking. Well, guess what that could be telling us? The hyperinflation has begun. We just don't see it yet. They start injecting massive amounts of QE back into the system. When that happens, you better be in position. You better be in position. Because that's going to, look, I could be wrong. These are things that are not within my control, but we're at the end stage here. Get ready. Just get ready. By the time you see it, it's too late. By the time you see it, it's too late. Get your physical gold. Get your physical silver if you want a strategy, because that's what we do at ITM Trading. We deal in the physical metals, obviously, to fulfill the strategy, but we help people develop their own strategies based on their goals and their circumstances. And then we help you stay informed and recognize, that's what my work on the YouTube channel that we have, ITM Trading, or you can Google me, Lynette Zang, it'll come up. But that's what my work is all about, is helping people know where to go. So I put links in so you can capture different links that you want to go back to and pay attention to. And I show you the images so you can start to recognize the patterns. What are the smartest guys in the room doing? What does that look like? Here you go. And now you can start to make educated choices that support your real goals, instead of being quote unquote nudged by their perception management so that you're leaving your wealth exposed, you're volunteering it, and you don't even know it. And when these markets crash, heaven help us all, because whatever wealth is in there, it's staying. It's not coming out. Look at 2008. And that was just a warning. This is the end.
Lynette, thank you very much for being on the spotlight. I really appreciate it. Once again, how can people see your work? What's your website again?
It's itmtrading.com. And then on YouTube, if you just go in there and put in ITM Trading or Lynette Zang. And we actually love personal contact. We really develop nice relationships with our clients. So it's 696 4653.
Lynette, once again, thank you very much for being on the spotlight. I really appreciate it. Thank you very much.
Oh, my pleasure.